Hello and welcome to interest.co.nz. I'm Gareth Vaughan with another of our double shot interviews, and I'm joined by Sam Shuttleworth, who's a partner at PwC. Thanks for coming in, Sam.
Yeah, my pleasure.
We're here to talk about Banking Banana Skins 2014, a report that PwC does every 2 years in conjunction with the Centre for the Study of Financial Innovation, which is a London-based think tank. Now, Sam, you get responses in this from bankers, what you term observers, and also risk managers, and they're all a little bit different.
Yes.
But the World Index you put together, which combines all responses from all three of those, is interesting, and it has regulation number one for the first time since 2006. So I guess that's an interesting point to start at. I mean, are we suggesting here now that that issues like liquidity aren't top anymore, and macroeconomic risk, which have dominated in recent years, that I guess people in and around the banking industry are comfortable now that the global financial crisis is in the rearview mirror?
Yeah, the number one response, the greatest risk or the greatest fear for the banking community by the survey respondents was regulation. And what they were basically indicating to us as part of this survey was regulation's been brought in post-GFC, which is fully understandable given what occurred. But the concern is now well, have we got too much regulation? Have we got excessive regulation? And the cost of complying with all the various pieces of regulation that have been brought about in the last 4 to 5 years, is that actually being harmful for the banks, preventing them, I guess, doing business, helping them to, or preventing them from lending, which I guess is also then having a detrimental impact on, the global economy, basically putting on a bit of a brake when it's not necessary.
I guess another perspective, you might look at this and say, well, hey, are they crying wolf a bit here? Because we have recently been through the GFC, obviously, which, there was some pretty bad behaviour by banks that kicked that off in the US in particular. We've had plenty of scandals, obviously, in recent years around money laundering and JP Morgan's whale and LIBOR fixing and that type of thing. So is there an element of crying wolf here?
Yeah, first and foremost, regulation was required. There were issues which needed to be addressed. So to your point, I guess you could take a view that some of the survey respondents were also saying this, look, enough's enough. We are the ones that have been operating effectively. Now let us do our job. Prevent the regulation, make sure it is right, because of the concern that by bringing some regulations on certain aspects, there will be unintended consequences to prevent something from occurring, but it also mean that what was done in the past can't be done again, and which of course some of that was required. So to your point, was there a bit about crying about the wolf? But I guess it's only natural, given who the respondents were to the survey, to say that I think we're at a good place in the regulatory environment. We just want to make sure that the cost of further regulation now is not outweighing any potential benefits that could arise.
Now, in the global survey, 1, 2, and 3 are regulation, political interference, and macroeconomic environment.
Yes.
The responses they're all scored out of 5, with 5 being the most severe risk.
Yep.
Those 3 are well above the fourth placed item, which is technology risk. What is that telling us about these three banana skins?
Yeah, I guess that they all kind of in some way go hand in hand. When you look at the regulation risk, or in this case over-regulation, political interference, 2 kind of quite similar type of risks, and basically at the forefront of what's happening in the Northern Hemisphere, if you see what's occurring there. And then also the downstream impact of those, of course, is the economy, the global economy, and maybe dampening, preventing the wheel getting going again. So I guess it's not surprising actually when you look at where things are at, because of all the issues of the GFC, the liquidity has resolved itself, the credit risk, those problematic loans are slowly working their way through the book. So again, it is the kind of what's termed in the report a bit of bank bashing, and what does that mean to the banking environment and the public perception is, I guess, their number 1 or number 3 in this case, banana skins. What are their fears? What's going to slip them going forward?
Now, you've also broken out an Australia and New Zealand survey, which is really interesting because that's obviously our part of the world.
Yes.
And it's in some areas quite different to the international one.
Yep.
For example, number 2 on the Australia-New Zealand list is the pricing of risk. Number 5, sales and business practices, and 7, social media. Now, these are all significantly higher than they are in the world survey. I mean, if we go to social media, for example, 7 for Australia and New Zealand, 19 for the world. So why is social media such a bigger concern or issue for New Zealand and Australia banks?
Yeah, and that was really interesting, and I think it reflects how quickly the Australasian banks have embraced the digital age and using social media to communicate with their customers, and also to deliver service to improve the customer experience. You know, a lot of us have got the smartphones, the tablets, and so forth. And so the concern that has come through in the survey for the Australasian banks is actually more of a reputational risk, and understanding that while we're putting ourselves out there in this digital age and trying to do things fast, more efficient, we may get it wrong. And if we do get it wrong through the likes of Facebook, Twitter, we can't control the story. Stories go viral so quickly, and it's actually a bit of a reputational issue here. Compare that to globally. The global banks aren't as far down this digital journey as our Australasian banks. They aren't as fast through with the apps and so forth, and that's why it's kind of first time on the list, but it's down on the list on 19th place, versus the Australasian banks, first on the list, and it's straight up to number 7. Be interesting to see what actually happens in a couple of years, because of, I guess, this digital age we are, and what's fashionable and what's not. It's so dynamic, it changes so quickly, and it'll be interesting to see how this pans out.
And in terms of the pricing of risk, I mean, that's come in at number 2 on the New Zealand and Australia list. It's well down on the international list.
Yep.
Are we talking there about underpricing? Is that what we're saying? And what is the specific concern?
Yeah, and I think it reflects of the environment we are in New Zealand and Australia, and the pricing of risk or the mispricing. To me, that's all about competitive pressures amongst the banks. We are in a low growth environment, and unfortunately, when you're a corporate and you are wanting to renegotiate your banking package, there's winners and losers, and I guess those that aren't successful, I guess the concern is mispricing. The other way of looking at it from a consumer's point of view is, well, that's just market forces, competitive pressures at play, and because we're in a low credit environment, that's not a bad thing.
And on the world list, technology risk has gone up to number 4 from 19 in 2012 when the survey was last done. What are the sort of driving concerns on that one? Yeah,
and again, there's a couple of levers at play here. First and foremost, I think the Australasian banks are further down the journey of replacing core banking systems versus globally. There's still a bit of old technology there, and it's a massive process to swap from one core banking system to another. The other aspect, I guess, more is impacting globally, of course, is cybercrime, and of course the technology risk there is coming through there. The concerns of the cybercrime that's occurring is coming through in that high ranking, and of course, I guess the as we talked about earlier, the digital age again. We are embracing that. The global machine is behind, but not we're at the same level, and again, so they're working through those, I guess, the concerns and risks that arise as a result of technological change.
Okay, so I guess the key question is there's always risks out there. We've highlighted some of the key ones that people in and around the banking industry are currently seeing. How well placed are banks to deal with these risks? Yeah,
interestingly, it was one of the other questions in the survey was the level of preparedness, and the Australasian banks have indicated they are better prepared than their global peers, out of a scale of 1 to 5, 1 being poor, 5 being well. The Australasian banks have graded themselves about 3.5. Globally, they're at a 3. And I guess that reflects 2 things from my point of view. One is the great Aussie Kiwi attitude of can do. What's in front of us, we'll deal with it, we'll get it right. And so it's kind of that number 8 why mentality. But also the other aspect is, when you look at the issues that arose from the GFC, the Australasian banks didn't have it as severe as their global peers. A lot of that was due to appropriate banking practices that were occurring down under, and didn't have to deal with those same headwinds as the Northern Hemisphere banks. So I think the level of preparedness for the New Zealand banks and the Australian banks, we can be confident that yes, there are risks, but in their view is we can manage and we can work our way through these risks.
Well, thanks a lot for that, Sam.
Yep.
That's Sam Shuttleworth, who's a partner at PwC, talking about Banking Banana Skins 2014. And I'm Gareth Vaughan at interest.co.nz.